Good morning, everybody. Distinguished colleagues. My name is Ömer. I came from Turkey, from the city of Istanbul. I work as an agricultural marketing manager. I'm not sure if you hear me. Okay. I work for an agricultural marketing manager in one of the private banks that is number 5 in Turkey. And I will try to add something on ALES that Erdal told you before me. But let's start with the rationale, the legal grounds that why we establish agricultural banking in Turkey and in our bank. And then I will skip to the to show you a demonstration. Okay, I believe there's no reason to emphasize the increasing strategic importance of agriculture, since it's common for all of us. But let me tell you about Turkey's case and Yapı Kredi case. So we, in Turkey, agriculture has a share of 9% in GDP. That is $60 billion. That makes us number 7 in the world. And also, we have 25% of labor force in agriculture. And it makes 6.5 million people. That I consider it's a quite high number among many countries. And recently, we experienced a rapid, massive consolidation of lands, farms. Unsustainable small farms leave the sector to their son or brother. So smaller ones trying to get medium, and medium-sized are trying to get big with purchasing of new lands, new animals. Also, we experience high capital inflow from other sectors, such as textile, such as food and beverage industry. They invest big monies to establish big plantations, since we are a free market economy and we have no constraints. Also, the legal arrangements, trying to put the farmers into the registry system and favors the quality, the productivity. Among these, we have still important competitive advantages, such as access of arable lands, sunny days, and cheap and experienced labor. And these motivations helped us to establish an agricultural banking segment. First, we started to design a loans package in 2009, and after followed by an action plan in our bank. Then in 2011, we established an agricultural marketing management unit by me in July. And a few months later, we hired regional agri-managers, agriculture managers, settled in regional directorates to coach our branches for agricultural targets. And in 2012, we announced our new set of policy for agriculture and also ALES throughout the bank. Okay, you see our organizational chart. Yes, as you see, we have 2 main groups in the bank. The first is the retail banking group, and the second is the corporate group. All of the agricultural activities are established under the retail group, since majority of the farmers, the size of the farms are small. The average arable land owned by farmers in Turkey is 6 hectares now. Yeah, it's getting bigger year by year, but it's still small. So we have a special unit also under SME underwriting, a special agricultural allocation unit and also a different unit, special unit for monitoring and restructuring overdue loans of agriculture. Also, we will attend a manager to assess the risk of agriculture under the chief risk officer. I will skip this slide fast since we have another panel discussion in the third day about agricultural organizations. So you see our product universe. We have different types of loans for different subsegments of agriculture. And it's our main policy to develop products for every different subsegments to analyze better and to serve better. We have also leasing options, insurance options, also have special cars for farmers. Let's have a look for our performance. By the end of this year, we forecast to reach over $500 million agri-loans volumes directly given to the farmers. And 71% of this total will be operating loans. The percentage of investment loans was 11% 2 years ago, but since we established and enacted a new policy, concentrate on the investment loans, the percentage of loans will be reached to 28%. And at the bottom, you see the number of loan customers. We forecast it to reach over 43,000 by the end of this year. So you realize that our ticket size is $10,000 and will reach $13,000 by the end of this year, since we concentrate on investment loans. Okay, now let's see the machine. What we have for ALES. Okay, I know Erdal briefly told about the advantages of the ALES, but let me also summarize the advantages of ALES from my point of view. The important, for me, I want to say important advantage of the machine is to store historical data of customer and its production, his or her production. Before 2011, we don't have any historical data to analyze the income or the revenue of farmer. But with help of ALES, we could do now. Also, we can keep count of quality and efficiency because of the questionnaires within the machine. And with ALES, we skip on a new maturity policy that help us to lend according to suitable with the harvest time. You see our internal announcement in the right. Yeah, it's unfortunately it's in Turkish and it says the automatic era has started with ALES. Erdal told you the process of ALES, but I can say briefly, creating and updating the database is done with help of Frankfurt School, and it's really a big effort to do this. Okay, let me show you the basic scheme of ALES in this funnel. So ALES evaluates 3 main groups of data to reach the outcome. The first is the local production data of the farmer. And the second is the questions for productivity and sustainability. And the last is the financials of the farmer other than the agriculture. And with these data, the machine calculates 3 important numbers. The working capital requirement in a season, in an agricultural year, the net profit, and also the approved loan limits. I must say, ALES is mandatory for all of agri loans for our bank's case, except the investment loans that requires detailed projections, like constructing a dairy farm or a greenhouse, since they are construction works. But I know Frankfurt School works on it to develop, to include all types of investment loans to the machine. In last year, we have 42,000 of loan proposals submitted through ALES. And for this year, we project it will reach nearly to 80,000 at the end of 2013. Now we have more than 1,000 technical cards within the system. You see in the brackets, we have 26 regions and 87 products in each region. So it makes over 1,000 technical cards. The database still grows with new products also. Okay. Now, let's see how it looks. I should say, the picture you see is not the Frankfurt School version. We used Frankfurt School version, first the Excel version in 2011 in pilots in a 5 months period. Then we skipped to the web-based version of Frankfurt School in 2012. And this year we developed our own software to enable us to integrate the system with the other scoring and database systems within the bank. And also to localize, to specialize the machine for our bank's policy, I may say. So unfortunately, the program is in Turkish, but you see the explanations on the right. The part above is filled automatically since it's been fed with other systems, from the other systems of our bank. But the part at the bottom filled by relationship manager in the branch. And it is the requested loan type by farmer, its maturity in terms of number of days, and number of installment if it's an installment loan, also the interest rate. At the second part, you see the financials of the farmer other than agriculture. At the left, you see the revenues and receivables other than agriculture. So the farmer may have a second job and get salary or rent from his real estates. Since they are important to create the overall balance sheet of the farmer, we put these figures into the machine. But in our bank's policy, the customer has to prove it with a document. You may not do the same. You may trust your RM or believe the farmer, but in our bank's policy, it's compulsory to prove it with a document. In the right, we fill the expenses and payables of the farmer. We don't need to prove it with a document. And at below side, we enter all of the bank debts of farmer. This part also filled automatically from other systems. In Turkey, we have a common system. Shows the overall debt portfolio of farmer in all banks. Leasings, credit cards, consumer loans, commercial loans, everything. Okay, we have some rows to consider exemptions for this debt figures. But most of the data filled automatically. In the third part, you see the questionnaire for sustainability and productivity. We have nearly 10 to 15 questions for each subsegment of agriculture. I mean, for crop production, for poultry, for fisheries, for dairy, and for livestock. You can add new questionnaires according to your need, according to production types in your country. Also, we have been specialized, we have been changed a lot of questions, for example, with collaboration of Frankfurt School. In the fourth part, now we will enter the agricultural production of the farmer. We select the product name from the scroll list above. So we have 87 products in the scroll. It will be useful to open an online version, but for the sake of time, just imagine that when we click on this scroll, it's open. So the RM enters the production size of the farmer into this area in terms of dekar. We use dekar in Turkey. And automatically, the figures appears in this part. The yields, the farmer price, working capital requirement, revenue, and maturity. And at the bottom, RMC, the total gross revenue and the capital requirements, working capital requirements for the season for this farmer. And in the last part, we will calculate the result. Now we have a new model this year, so we can rank the loans if the farmer requests more than one type of loan. And if he couldn't take all of the loans, and his revenue is not capable to get all of the loans, the machine will respect this ranking. And then we click on this button, and we see the result. The requested limit, and the approved maturity and approved limit. On the right, we see the financial results in a table. The revenue, expenses, net profit, also the dominant product and the dominant maturity for the farm. We use this dominant product and the dominant maturity since we want to give only one maturity in a year for farmer. The farmer may produce more than one type of product, and each product has a different maturity harvest time. But we propose the farmer the dominant product's maturity as the loan's maturity. Okay. I told you that we have also a complementary policy with ALES, that is the Agri-Cycle policy. Before ALES, we didn't have any cycle policy for agriculture, but now we announced an agri-loans reference timetable, giving the production and harvest time of each product in each region. Also the credit allocation and collection periods. The reference maturity is mandatory, but we have also exemptions with the approval level of regional agri-managers or the underwriting team. So you see the effect of our new policy. This new policy shifts additional 17% of our loans to September, December, to between September and December, since most of the harvest time of the products in Turkey appeared between September and December. Okay, there's no need to go again the strengths we get with ALES. But one thing I want to emphasize that with this system, you can easily present your bank's policy to branches, and you don't need excessive trainings. So you save from the cost of training also, because the program declares your policy easily. Also, what are the key points, I may say, the difficulties establishing such a system? The first point is such a system may create a resistance, also complaints in some branches, since they were independent before the system to give any amount of loans. So it may cause a loss of time. And second, you should decide how to behave the credit limits you approved before the machine, before the system. So you may apply reductions or just break with the customer. Also, you should establish mechanism to update the data, to add new products, new formulas to the system. So it requires a special organization. And last but not least, you have to integrate the system to your other scoring systems to have an integrated approach. Thank you very much for listening to me. I hope my presentation will be useful, and I thank you to inviting me this distinguished event.